Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I'm here with Bob Lang, the founder and chief strategist of, name your company?
ExplosiveOptions.net.
A company that's on the web and everyone looks at it, and it's a very prestigious situation that helps with idea generation, uncovers strategies for long, shorts. You want to explain about it a little bit?
Yeah, ExplosiveOptions.net, we basically trade some of the ideas that I do for some of my clients and some other ideas that I come out using my technical analysis training and the charts that I see that look real good and buyable and so forth. And we trade puts and calls, and a lot of people don't think that we trade both sides of the markets, but we do. And for those people who don't have the time, the ability to go out and do it on their own, they come and see what we're doing, and we've had a pretty good track record. We've had some really good returns over the last couple of years, and just we're moving forward.
Good, and we've done some work together where we talk about how we trade equities. Sometimes you do options, but we both use technical analysis,
right.
and that's what's important. I feel like using technical analysis, you take opinions, you put it out of the way, you let price let you know where things are going. So with having Bob here, we could talk about what we think is going on with the market and where we're at. And if you look at the chart of the spiders, okay, or the SPX, which we've been focusing on very closely over the course of the past, always. This was when, I think I came out and said, water pistol to cabeza call. If we break below the, 1970 on the SPX, we could see 1925. And then on Friday, we went as low as 191.67, which was 1916. But, Bob and I both talk about and follow, oscillators, and you said on Friday you saw a certain occurrence that triggered a different thinking for you.
Yeah, one of the oscillators I follow, Scott, is called the Mclellan Oscillator, and basically all it is a market breadth indicator. And what we talk about a lot is we let the markets tell us what to do next. So the Mclellan Oscillator is a breadth oscillator that tells us how far markets are overbought or oversold. And we saw a pretty rare reading on Friday, actually Thursday and Friday. It was in the high minus 280 range. If I put that into perspective, there was so much selling going on that it almost had exhausted itself. And the last 5-6 times going back to early 2013, when the oscillator hit a minus 300, there was a big, sharp, powerful rally in the markets every single time. I mean, 100% of the time.
Now, would you call yesterday a big, sharp, powerful rally?
No, I wouldn't. And that's what's really kind of concerning, because my expectations after Friday was that we were going to get a big, powerful rally, and it just seemed like it was almost had the feel of a dead cat bounce, or just a bit of an oversold bounce with not a lot of conviction. And we still need some more follow through. And if we talked earlier about going back to April, when we had a very similar situation in terms of decline, similar decline that we had the last few days.
Right.
55 handles in about 2 days on April 10th and 11th. We snapped back in 6 days and recovered all that lost ground.
So let's look back at the chart and look at maybe some similarities of what happened then and what could take place now, because you're talking about this time period. Look at this time period in April when we went as high as 189 all the way down to 181.31, and then what happened there? The oscillator hit extremes. We use a different one. Sometimes our extremes are minus 70. You had a day down, day up, and then I remember that third day, because I think I was long that day, came all the way to test this area. Everyone got bearish, and then we engulfed it and closed above the 2-day high, and then penetrated, this wide range bar. So that's when the bears pretty much lost control. So if you go to where we are here, this morning, we are Tuesday morning. I think the spiders are down 90 cents. It'll be interesting to see how we handle this. First level of support is 192.05. It'd be nice to see us hold at least above that. And if they bring us back down to Friday's low, I have a feeling anyone that has leftover longs, which I actually have a few because there were some strong names which we'll get into, we'll probably have to hit it out. But ultimately, we're below 1952 or 195.20. And we have this pivot area. So if the bears, want to keep full control, they keep us below this 2-day range and below this pivot. And if today, if we open down 90 cents or 9-10 handles and close down 20, then we have to start looking at lower prices, and that could be a little bit closer to the prior breakout, which is around what is that, 189.5?
That's right. And you know what really shocked a lot of people was the action on Thursday, because we opened up down about 15 handles and ended up down 40. There was no rally at all, nothing at all.
That wasn't that shocking. We lost a 50-day. Well, you had summer faulty action. You had geopolitical stuff everywhere. Yeah. That was, I think, what traders were waiting for.
That's
something decisive, and that was actually decisive.
That's
better than opening down 15 and closing down 8.
That's right. And a big, huge surge in volatility. And let's don't forget the VIX, closed up near 17, and we did lose a lot of that ground yesterday. But still, again, not a lot of conviction. And, with the volatility index closed to just above 15, we had closed actually above 17 on Friday. So we did lose a lot of ground yesterday in volatility. But again, there was just not a lot of not a lot behind it yesterday.
Well, the question was, was yesterday a head fake to the upside to give a false sense of security for the bulls before heading lower? And what we do is we look at signs, and right now we have levels in the spiders, but you also yesterday had some strong stocks that went green first and then gave you some follow through that I guess we're going to have to look at today, and I know Bob has a few of them. What's the first stock you want to look at on the stronger side?
I agree with you, Scott. We've been in the stock pickers market for the better part of a couple of years, and so regardless of what the market is doing, there's some stocks that can stand out and do great things on their own. One of them that we've talked about a lot is Tesla.
So you want to do Tesla first?
Actually, yeah, we can talk about Tesla
first, because I actually happen to be in that one. What do you think about how it reacted on earnings day?
Yeah, fantastic move on earnings day. I mean, it jostled around, went under, it really gave you a good entry point if you wanted to get long the stock in the after hours, because it actually went down to about 217 or so. Right. And then it rallied back strongly on Friday, and it followed through yesterday. That was the key thing.
So now today, Tesla's down a few bucks because of the futures. So I know for me, I'm long a little bit. I'd like to see it hold this 233 to 234, and I guess today, if we're going to have any kind of relative strength, Tesla's a stock to look at, because if it does go green and trades through 240, 50, that would be constructive and give us some clues that maybe today we can come off our lows. But if Tesla opens down 3 points and goes down 6 or 7, that'll be less fuel for some of the bulls.
Yeah, and the thing about Tesla, if you look at the last few weeks, it's shown the fact that when it comes down a little bit, it catches buyers down when it's been down. So I agree with you. If it comes down even further, then that's you got to cut bait right there.
Yeah, sometimes it comes back. Sometimes you don't want it if it comes down too much. Right. You want it to hold higher. So for me, my line in the sand is 234, 235. Yeah. One more time at the chart. I guess you could also say that the 8-day is even lower than that, or the 50 actually had 220-ish is all the way at the 50-day. The 8-day is somewhere closer to 228. Let's move on to the next stock. So one I had up, which you mentioned before, was Facebook.
Yep, Facebook.
What are you seeing in Facebook?
Now, I like Facebook. It had that nice huge gap up after earnings, and came back down a little bit. It wasn't catching a ton of buyers up there, and it needed to come back a little bit. But it almost looking, Scott, like Friday is that it's got a doji, almost a red dog reversal on that. And I particularly like this stock. It filled the gap. It's been catching, it's caught some buyers up here. It's not selling past, if it gets past this, that breakout area to the downside, which is, it looks like it's about 70, just above
71.55.
Then it might have some trouble there. But I'm willing to let it prove itself first.
Well, we like to look at stocks that are strong too. So this had a great earnings report. The way the market is, why would they buy it the day of earnings? They could let it come in, and some of the gap was filled. So
that's right.
We try and wait for, like what Bob said, some kind of pivot or doji, something to give us a sign that we could buy versus an area. And if you look at Facebook, it gave you that sign on Friday, gave you a small doji, and then yesterday actually had enough power to break above 73.22. So today will be interesting. I think it's down 30, 40 cents. If the market's going to come off the lows, Facebook probably has to try and go green, maybe even try and go above this. If it were to start to get below 72.36, that'd be frustrating for some guys who have it overnight. I know I have Facebook overnight below this. You know what? I probably won't give it all the way to 71.55. So this is one of those go-to names. Again, you have to look at to see if the market could get any strength. And then there's another name you're looking at in a different sector.
Yeah, U.S. Steel. This is it's been one of the strongest names of the last week or so. Now, the steel group has been pummeled for the past year and a half. I mean, you could look at any chart. Nucor, ArcelorMittal, this one, Steel Dynamics. But look what happened last week. It had a big, huge gap up after earnings, and it followed through. We haven't seen very many stocks do this after earnings,
nope.
to follow through like this.
So what I would say is, when that happens, you have a great gap, you have a great point of reference.
Yeah,
and
absolutely.
You look at X, and this is the first one, but it's all the way below at 31.21. I would say short term now, for momentum traders, it's got to stay above 33.17.
That's
if it
right.
does, maybe it creates another flag, and then it can continue. So this is something maybe you look at also, to see if some strength can come back. But if it starts breaking below this and pulls back into, where it gapped up from in the moving averages, then you just know that, the strongest stocks are hard to keep, big time momentum in there.
Yeah, and you talk a lot about commitment and a lot of conviction, and when a lot of traders, a lot of investors go after the strongest names. They keep going after momentum to stocks, and this is, if there's still some momentum in this market, then we're going to go out and look for the
yes, you got to look for the strong names, especially in a down tape and a sea of red. And then you said you liked Melly. Melly's nice and tight.
This is a really interesting case here. Now, obviously, it's not a breakout yet, but I'm thinking that once we get past that $95 area, there's a lot of congestion in that 95 area. You can see from that recent high in July. If we get past that 95 area, and I'm anticipating right here. This is not a, I don't have a huge amount of.
So if you're anticipating, are you in a tier 1? Are you in a feeler? Like what are you in when you're
it's
anticipating?
Maybe a half position or something like that. A smaller, smaller half position. So okay. I'm putting some on right now, and I do have earnings coming out this week. So we'll see what happens. The last couple of times they've blown it out on earnings, done really well.
When are the earnings?
I believe it could be Thursday or Friday.
So will you take the options into earnings?
Yeah, absolutely. Yeah. I mean, I especially the fact that they're not priced for the earnings.
Right. It's kind of like Twitter. Twitter was tight. The consensus was against it. That's why I took calls into Twitter, thinking, if they have anything really good, it's going to be explosive. And then, so with this is one of those high beta names. If it's out of play and tight,
that's right.
And it's great. It could have that shorts cover, squeeze, great type of trade.
And similarly to Twitter, this one was hyped up in prior earnings reports, and they got the implied volatility up, and then a little disappointment, and they let the air out of it. Like in Twitter back in April, you remember, I think it was in the 60s, right?
I fully remember.
They let the air out of it, and right back down. Well, this one was the
opposite.
180. It's it was at $38 when the earnings came out, wasn't it?
Right. So let's also. I just want to throw one stock in there that's kind of on the fence. Stock that's near and dear to the two of us. That I love playing from the long side. And back 2 quarters ago, I ccame out and said iPhone to head. I think it goes to 100. It went within 50 cents of 100, and I still don't think the highs of the year are in. But right now, it could be a little bit vulnerable. You look at this chart of Apple, you will see that here's the trend line from April. This is when the iPhone to head call of 100, and it's been following trend ever since with lots of trades along the way. Here's when you had the descending channel, went again. Then here's on earnings, it acted well, but now it's hovering right on the trend line. So I do not have any Apple long, and some are saying that if it breaks below 94.81, it could be a cute short down to the 50-day, which makes sense. Or if you are long it, maybe you get out of the way if it breaks this, and then you get a chance at the 50-day. But ultimately, it's been riding this trend, and if it does happen to break it and not reclaim it, the composure changed a little bit. Doesn't mean it's game over. It just means it's not as tight. It doesn't have the same complexion. So I would be watching 94.81 for very short-term action. Trying to anticipate what's happening with Apple over here. You can see the formation of possibly a head and shoulders pattern forming right now. You have a left shoulder over there at about $95, and you have the. So you're saying this is the left shoulder?
Correct. Right.
And this is the head.
The head, and if we see it start, hovering around the 96 and a half area for an extended period of time, and then it breaks it, and then you've got the right shoulder made, and then So it's not there yet, but it's something to be looking for.
So you're saying you're looking at this potentially building. So you're saying like this is one support when it comes into, but then really you're looking for a bigger pattern, which would be left shoulder, head, right shoulder, and then from there you're talking about a much more extended move lower, which would be very negative for the overall market. So right now, step by step, 94.81 is support 1, and the 50-day support 2. And then there's a lot of other weaker tech names. You mentioned something, which we also talked about as being weak, is Qualcomm.
Yeah, in this one, it broke down after the last earnings report.
They really begged everybody here. Really? Every single person thought that it was going to go. It broke above the day before numbers, and then sandbagged the entire 4-month range.
Well, and then look at the reaction this time around versus April, right? It broke down in April after the earnings came out, but it rallied back 3 weeks later to the right near the highs, right? So everybody probably looked at that and said, "Oh well, this is just Qualcomm. It's going to gap down after earnings. It's going to come rallying back." Certainly didn't happen this time around.
Well, if you look here in April, it came right to the gap and churned through. Here you had a gap lower, and it followed through to the downside and then couldn't reclaim even half of this bar, which gave you some clues that it was going to have more downside follow through. So now down here, you could be shorting this thing through Friday's low to get lower prices. I think it's a dangerous short now considering where it came from, but it's definitely not a long yet. It's below the 200-day moving average and comfortably below there too, which is never a good sign.
I think shorting it up at that resistance level is probably where your better probability is going to be. Maybe
Which
up
one?
Up the 200-day moving average.
Oh, so you're saying you think if it rallies back up to 75,
right.
short it, otherwise avoid it?
That's right.
Okay, let's see. One other thing you said on the weak side. Oh, you were talking about crude. Crude, which you look at crude, thank goodness it's getting weaker. That could be better for the consumer overall. But
it's like a tax cut, right?
Yeah, it's like Warren Buffett, right? If it's tax cut, quick, whatever, cheaper crude, less money for gasoline, blah blah blah.
That's right.
Anyway, you look at USO, which is ETF for crude. Here's a trend line that broke right around 38. You came back, even had a chance to resell it on that test, and now it's below the 200-day. So what are your thoughts with crude?
Yeah, you look at what happened yesterday, and you'd say, okay, well, maybe we have a reversal here, and this isn't all clear. But look at the conviction at the bottom. You see the volume bars on the bottom. There really wasn't much conviction there. You didn't see a really heavy volume day. 2.4 million shares was lower than its average normal volume. So there wasn't much commitment here on this for crude over here. We've fallen from about 107.5 to just a few weeks ago to just under just 99, I think 98 and change.
Right.
And next support level is probably down to 92 on crude. If you take a look at that, it's pretty good, strong support. But it's certainly going to help consumers, as you mentioned.
It's got to get like extreme though. Can't be like a little bit, but it starts getting down there to the low 90s. I think that would wind up being positive.
That's right.
So let's check on the metals real quick too. You wanted to mention gold, the GLD, which is an ETF for gold. What are you thinking? I know you've been bearish and it's been hard to trade thinking about it just like I have. What do you think down here in this descending channel?
As you know, as you just said, it's a very difficult trade to make. You've got, especially something that's so news driven. We had the big pop in gold back in June, and that was as a result of some headlines from the Federal Reserve, right?
I remember, and that's when I was like, okay, it's in the game. Look at this wide range bar. It's holding the top third. You go like this, and then, it even looked good right there. And you had absolutely no warning, none, right? It broke here, looked like it was digesting. That something like that would happen.
That's
Boom,
right.
that blows traders out of the water.
Right.
And then look, when it finally looked really bad, okay, you had an inside day, then it came back up. So to me, that's a trading monotonous mess. And now, I guess if the market were to come in and those 40,000 troops happen to go into Ukraine emotionally, 124.60 is resistance and then 126. And if it has no rally with that happening, below 190, 123.23.
That's right.
It just, falls apart.
Yeah, and we've got that bottom over there back in June. We could definitely come back and retest that, which is about the 119 and a half area.
Yeah, gold's had a lot of reasons to rally. When things have reasons to rally, like Gaza and Israel, and then the Ukraine, Russia, and then Iraq, and this and that, and it doesn't, chances are it's telling you that it's probably going lower.
That's right.
So we'll see what happens, over the course of next week with that.
Yeah.
And then, what's interesting about our styles is we like to trade different time frames and use technicals and ultimately let price, control our thoughts and our strategies. This morning or last night, Tom DeMark came out and made his call on the Shanghai, on the FXI. He thinks we're a day away from perhaps a 10% correction. What do you think about guys who come out and make like those big headline type calls?
I think it's really dangerous to pay attention to these people. And I think, most of these calls tend to come out in a fearful way. And fear brings interest. And basically...
And page views.
What's that?
And page views.
And page views, absolutely. Listen, I mean, it's just, it sells. If it sells, then it's good. So, again, it's dangerous to be listening to these things. What we'd like to do is we like to pay attention to what the market is telling us. I'm not going to listen to somebody who is giving their opinion based on, not based on any facts. The facts that we look at on the chart are right here in front of us.
Well, if you look at the FXI, just because something that, in my December thesis, I wrote about how potentially, it could be a great cost average, for some type of breakout, this year or maybe next year, not knowing the timing of it. And so far on a monthly basis, great cost average. And as a trade, it also already ignited. So I'm telling guys that are scared of DeMark's call, say, you know what? Strong sectors follow the 8 and the 21-day moving average. If he happens to be right, it's going to have to break the 8-day first. And if you want to use 40-40 as a stop, fine. or give it room to the 21-day. But ultimately, I still think, in my humble opinion, you could cost average into the FXI over the course of the next year or so, that at some point you go to the monthly chart of this, and it will be something that you could use as a vehicle longer term. There are some long-term vehicles, and there are some active vehicles and midterm vehicles. And as of right now, so far, I think it's on its way. And at some point, whether it's second half of this year or next year, it could clear this area and give you a run that you're never going to be able to get back into.
Scott, it's kind of ironic, that Tom DeMark came out and said that he said the FXI or the China market is going to top. I didn't particularly hear him when when you were talking about it, saying that this is a great time to buy it. So he didn't come out and make two good calls. He just made one call, and we're yet to see how that develops.
Right. Well, he also, if you look at the SPX real quickly, I think he came out right here. Not to keep talking about him, but right when the market looked as if it was going to break down, okay, right around this 1880, I think he came out with the call. There was a lot of bearish calls there, all bearish calls, but then look what happened. We ignited and traded over this little spot, and that went, I know I was neutral to negative in here too. I was like, I don't know, maybe we break below this and we could get a correction, but it didn't happen. So you could have switched gears here around 1890, and then you had 100 handles. But if you just listened to him and shorted here, chances are you weren't solvent for those 100 handles higher. So take a call, watch it and see if the market actually enforces it or executes on it. But if it doesn't, that's all it is a call by someone who might be trying to make some headlines.
That's right. Yeah. So
I think in closing, we're in this shaky area. We're in August. We've had a pretty sharp sell-off that some think it's going to lead to the big one, and some think that's what we've had the past 2 years, where we might just regroup and go. You're being flexible in this area.
That's right, and you've got to let the charts and the markets tell you what to do. And when we pay attention to volume, we pay attention to the oscillators, as we talked about, we pay attention to the action and especially the price action of the indices. And if it's telling us to do something, whether it's go short or get out of the markets, then we're going to do that.
Right.
And I'm not going to pay attention to anybody else who's we often find ourselves on the same side. No coincidence, right? Because we're looking at the same thing.
Exactly. We're reading the charts, and
That's right.
everyone has different time frames. Another important point is know your time frame. Okay. Know if you're a macro investor. Know if you're an intermediate swing trader, or just an active, no overnight cash flow, type of scenario as well. But if you could do all three too. Like I think that everyone should have some kind of long-term, situation in the market, whether it's a 401k, whether it's an IRA, whatever it is. At our age, if you do it every month over the course of however long, it's probably going to do good. Like if you invested your first dollar in 1987 before the crash and stayed the course, you did okay. If you invested before the planes hit the friggin' World Trade Center, those bastards, you would have been fine. Or if you invested $1, into the S&P fund before the financial crisis and stayed the course, we just hit all-time highs, last week. So I think this too shall pass. Stay to the macro course. If you're using intermediate trends, make sure you look at price action, because price action is key. Technicals, patterns, and then you have to obviously have an execution process that fits your lifestyle, your risk, and what you do best, and whatever you don't do best, just work on it.
That's exactly right. And you said it right. Pay attention to the patterns, and pay attention to the trends, and of course your own conviction.
Okay. Well, great having you again. See you soon.
Good to be here, Scott. Thank you.